Hi, happy Tuesday, and the hydrangeas are out. It's June. June's such a quick month. We have a huge conference this week in New York with JP Morgan running a 60 company event over the next couple of days. So there's going to be quite a bit of corporate news flow. Actually, we started the week with a couple of takeovers, which again underline that valuations in the market for equities are very much higher than what we're seeing in the asset market. At the moment, these deals are coming in well cheaper than what the implicit value of a Pioneer or a Devon are, compared to what assets are being sold for. Now, of course, there's a lot of complication around making that statement, but essentially the valuations are looking low. So it seems that the private equity players essentially are capitulating on Permian ownership, having drilled themselves very rapidly. They now are getting out at low valuations because essentially nobody wants to buy somebody else's decline curve. And so the implicit valuations that we're seeing in Permian transactions are actually pretty negative. And at the same time, we're highlighting that these special dividends, variable dividends, all need to be cut. Combine that with, yeah, we think the economy can keep going. I've been saying to the oil CEOs, look, man, you just got to say AI. This industry really leads in technology genuinely. That is to say, it's not some theoretical application that may work. It's real reservoir mapping. Shell, I was complaining that Shell's CEO last week at the analyst meeting, which was, kind of this time it's different, which is what I expected, but at the moment there's no credibility, so he has to build credibility of this time it's different, but his shift is significant. Nevertheless, when he was asked about AI, he didn't repeat AI 10 times, which is what I told him he should have done, even though, for example, in Namibia, the oil industry is using AI to find the oil. And I think Namibia is exciting, actually, at Shell and Total. Another client was actually saying to me that he was visiting Guyana with Hess and, with Exxon, and the delineation of the Guyana reserves is extremely tight around the Starbrook block, which is interesting because it means everyone else drilling around there is really not finding anything, and it's just a unique asset. And we basically love Hess here. We pretty much like Exxon, but generally speaking, we're quite negative on the oils, just because we think that the excess of NGLs is not well covered by the market. We've done everything we can to cover that. We've sent you numerous notes on the subject. But essentially the market tends to just look at black oil, which is OPEC quotas, etc., and they're like, hey, everything's going to tighten. And you're like, yeah, I don't think so, because the NGL market is so weak, it's going to drag everything down. So that's sort of giving us a pretty negative standpoint right here. We do think that productivity is rolling over and we're going to enter a mega bull cycle. But we've got to get through this recession and we've got to see the productivity come down, which is sort of happening in the US, but it's not as powerful as it will be. What you'll find over the coming couple of years is that the E&Ps will actually continue to cut capex. US production will come down, in my opinion, and that will tighten the market because that's been the marginal source of growth for global oil over the past 10 years. On the other hand, we do expect opening of Canada, and so we're very interested by the what's going to happen to Canadian differentials, which we think will tighten a lot, and how negative that will be for certain oil stocks, for example, at Dyno, where they're very dependent on the Canadian discounts that may well just sort of go away now once the TMX starts. But of course, once TMX starts is a big statement. We don't know exactly when that will happen, but we do know they've dropped $32 billion on it, and it's probably going to go ahead. I would expect that within the next year. So, at that point, it's going to be tough for some of these very Canadian heavy oil discount dependent companies. The other thing that's happening, which is quite interesting, is that you have the US government is arguably controlling spare capacity. So what you've got them is them allowing Iranian smuggling, allowing Venezuelan exports. There's a few areas where actually the US government is and of course turning a blind eye to Russian exports. The US government is arguably more in control of the current oil market than the Saudis are. I think they definitely are. And Saudis in a worst case scenario because they're having to unilaterally cut to try and hold this thing together, and that's not a good place for them to be. The outlook right now is pretty bearish, let's be honest. I mean, I can't wait for the bull cycle to reestablish itself, but I just don't. We just don't see it right now. Lots of corporate news flow, as I mentioned this week with J.P. Morgan, and the other thing to watch is going to be consumer sentiment type stocks reporting, notably FedEx after the market tonight. Another good example, I published the chart yesterday where the entirety of the stock move this year has been multiple expansions. So what we're seeing in this market is not really, earnings are not that bad, but the moves in the stocks are all multiple expansion, and that is arguably very unsustainable and could turn bad very quickly, especially as the Fed attacks the cost of capital. So just watch out there, people. Stick with the flowers. And I'm now going to give you a very short tour of the garden so we can look at the herbs. I actually made this St. Francis statue myself so that he dribbles water from his, you see? He dribbles water from his basket, which I actually bought the statue and then made the fountain. And I just want to show you the herbs. So the herbs are doing well here. This is obviously parsley. This is another parsley. These are tomatoes. That's oregano. And over here they just got watered, so they're looking miserable, but I can promise you they're actually pretty happy. All right, have a great week.